amidst this whole supply disruption, I presume that the higher global prices are also supporting the jump in domestic HRC prices versus what was there in. I mean, if I take December 2021 as a benchmark, as I learned today, and please correct me if I'm wrong, sir, but you also apparently have hiked HRC prices by $2,000 per ton on 25th of March, and reports suggest that there could be another 3,000 rupees per ton hike coming in April as well. Would these be true? And would this purely be a factor of raw material costs, or do you reckon that demand is still looking very, very solid despite the higher steel prices?
Indian steel demand is reasonably okay, other than auto sector. In this year, India will be ending at 105, 106 million ton of total steel consumption. I think it's 94 million ton of last year. So there is definitely a good steel demand as far as Indian markets are concerned. As regards to pricing, which we talked about, they always follow what is the landed cost of imports of steel. So the steel prices in Asia and China have not gone up to the extent it has gone up either in US or in Europe. So we are Indian steel prices are actually mimicking the landed cost of Asian steel prices into India. So in line with that, the prices have gone up. But what is important here is the prices are only in the retail market, not in the OEMs, not in the other segments of the market. So the resets in the OEMs will happen either monthly, quarterly, or half yearly or yearly. So those will happen in the following quarter. Now, whatever increases you are seeing only in the retail segment for some of the products. I'm not able to hear you.
Yeah, and the resets that happen, say for example in April, would that be large in magnitude, considering the difference that is there between the Western prices and the Asian prices? That is part one of my question. And part two, sir, if I can, you indicated something interesting about what the Chinese futures prices are indicating as well. My question would be, based on where we are right now, supply, demand, disruptions, and depending on your view of how much is temporary and how much is difficult to say, would you believe that prices are slated to stay higher for the foreseeable future?
Demand side, I think there is something which we need to understand what is happening in China. China wants to stabilize their economy. There are two important announcements which have been made in China. Number one is they have wanted to set up over 500 gigawatts of renewable energy, which will stimulate the manufacturing activity in China. So there is a huge amount of capital expenditure that is being earmarked for this segment. The second one, in order to contain the overall energy cost to the Chinese economy, they have fixed the coal prices for the domestic manufacturing industry at a range of some $80 to $120 per ton. So which is much cheaper relative to what the international prices are there. So the energy is becoming cheaper to their manufacturing industry, and huge investments in the renewable side, which is also being done. These two together, the expectation is Chinese economy will stabilize. Once the COVID virus related issues and the lockdowns, right now which is there is depressing the demand for maybe a month or so. Thereafter, we expect the recovery as far as the demand in China and the overall steel demand is concerned. At the same time, because of the Russian-Ukrainian war, the spending on the defense from Europe is expected to go up. It is expected to be 100 billion euro. So that also stimulates the steel demand, both direct and indirect, which is expected. In addition to the transition to energy side, both together, we expect even European side, the steel demand should look better. As far as India is concerned, additional capital expenditure, which Government of India has earmarked in the latest budget. So we expect a very good recovery even in the Indian markets.